政府法案，本會恢復20
Government bills. This Council resumes the second reading debate on Insurance Amendment Bill 2020. Does any member wish to speak? If not, Mr. Alvin Young. Bear with me, President. I'm waiting for the letter. Thank you. Thank you, President, and thank you, duty staff. President, this is highly technical, and someone from the Civic Party knows about the details. I have been aware that Secretary Hui has been getting impatient, and there are a number of bills to do with FSTB. We are nearing the end of these bills. Now, there are two parts to this bill. First, to allow the sale of insurance-linked securities, and also to expand the scope of risks for the captive insurers. The Secretary introduced this to us, and he said that this will buttress Hong Kong's position as the international financial center, international insurance hub. Now, international means that wherever you come from, we will welcome you to Hong Kong with open arms. Now, Hong Kong being a such place can become an international place. It counts on the fact that Hong Kong has always been a free port from day one. We welcome people into Hong Kong. Will this amendment be of an international nature? Let's take a look at the insurance-linked securities. November 2019, the Guangdong Hong Kong Macau Committee held one meeting. There was a policy announced, and that is to allow the catastrophe bonds to be issued in Hong Kong. This is a way for reinsurance. We're not debating whether the catastrophe bonds are good or bad. There are merits and demerits with any investment products. In November last year, the central authorities supported mainland companies to issue catastrophe bonds. In March, the government presented this to the council. The speed, the efficiency with which this is done is not seen when it comes to other initiatives. Why is it that the mainland authorities support mainland companies to issue catastrophe bonds in Hong Kong? And they are very, very quick with it. Second, I mentioned international. Now, this is obviously a mainland decision, and the Hong Kong government is amending the law, and this is making it convenient for the mainland insurance companies. I'd like to put this to the administration. With this amendment, how many overseas companies will be selling catastrophe bonds, and the ILS? How confident is the administration, the overseas companies will be attracted to Hong Kong, other than the mainland companies, so that we can become the ILS center in the world? I do think the government will be very confident. The NLS has deterred a lot of the investors. The flooding near the Yangtze River and all the disasters in the mainland, I'm sure that I doubt very much whether the catastrophe bonds issued in Hong Kong will be so attractive. The other part of the amendment is to expand the captive insurer and also the insurable risk scope. Now, captive insurance means that it is set up by a parent company. It would insure or reinsure the risks of the company. There are 4 captive insurers in Hong Kong. According to the administration, the scope of insurable risks is too narrow, and they seek to amend the legislation to broaden the scope. Honestly, President, we have 4 captive insurers in Hong Kong, and all of them are insurance companies set up by mainland groups. So we are basically talking about mainland companies. Mr. James Lau, former secretary, said that with the mainland companies taking part in the infrastructure of the Belt and Road Initiative, a lot of companies would be considering setting up captive insurers to handle the risks of the groups and to increase their ability to handle risks. So the government has the Belt and Road Initiative in mind. They are not trying to help Hong Kong companies to break into the Belt and Road Initiative. The government is trying to make it convenient for mainland conglomerates. Now, please, Secretary, do not tell us that this amendment is to help Hong Kong to seize the opportunity from the Greater Bay Area. We can't be bothered. People in the right mind would know that this is tailor-made for the mainland insurers. All these hubs, financial center, please save the nonsense. This is indeed a help from the mainland companies to take Hong Kong as the springboard to go overseas. You may say, what's wrong with that? Hong Kong has always been a window to the outside world. Chairman Mao spotted the unique position in Hong Kong in those days. He said that Hong Kong could be utilized for long-term plan. Now, they are trying to take Hong Kong as the springboard and try to make profit out of Hong Kong. Would this be achievable? Hong Kong becomes a springboard for the mainland insurers because of the one country, two systems. It is because the international community doesn't see Hong Kong as another Chinese city. I don't think you need to hear from me. The international community takes a different view of Hong Kong. Even if we amend this legislation to make it convenient for the mainland companies, they will not be able to take Hong Kong as a springboard to move to the outside world, because people are very skeptical of Hong Kong now. President, this may be the last time I speak in this term. I'd like to thank those behind me. There may not be a lot of members now, but I'd like to thank every single one of them sitting behind me over the past 4 years in the history of the electrical days. The last 4 years were never easy, have never been easy, and they never gave up. I also thank everybody in Hong Kong who supports the Democrats. Also like to thank the Secretariat staff who maintain a neutral attitude. I'd like to thank them all, and I hope that they will maintain their neutrality going forward. In the next term, post-September, which camp would enjoy the dominance, and we all hope that the pro-establishment members will become the minority, and this will truly become a place that will keep the government on its toes and not a rubber stamp. With these words, I object to the second reading on behalf of the Civic Party.
Yeah. Mr. Chen Kin-po, I speak to support the second reading of the Insurance Amendment Bill 2020. Mr. Chen, do you have a phone next to you? Let me switch it off. The Hong Kong government would like to enhance the Hong Kong status as a financial hub. We adopt multiple measures besides the property tax relief bill just passed just now, and also what to promote the interest-linked security. And this bill would like to prescribe the regulatory regime for the ILS. First, on behalf of the insurance sector, I welcome this legislation exercise. The ILS can enhance the insurance sector's ability and make it more affordable, and the insurance sector can carry on more business. And the insurance hubs around the world have issued ILS, including our competitor Singapore, would have a very mature ILS market, and the capitalization market. Last year, the amount at 11 billion, and the catastrophic bonds is a common type of ILS. The Asian market still have plenty of room for growth, and Hong Kong is rather falling behind. We need to play catch up. For Hong Kong to promote global business and the GBA and the mainland have support the issue has catastrophic bonds by the mainland insurance companies. This interest will come at the right time. The ILS is the insurable risk by way of securitization and transfer the risk to the capital markets. Traditionally, the insurance company would transfer to another company by way of reinsurance so as to transfer or reduce it. And the ILS provide another way to diversify the risk. Usually, the insurance company and the reinsurance company would set up a special purpose insurer and to transfer specific risk to this SPB, and also would issue the financial instrument to raise capital. Even though the ILS has transferred the risk to capital markets and the government's proposed supervision is very stringent, the insurance authority will act as the watchdog to prescribe the fees and the rules, and they'll require the multi-agents liability to be fully funded and only be sold to qualified institutions be advised by private placement. For example, the funds specialized in ILS and hedge funds. That means ordinary citizens will not be able to get access to them, and for the funds with targeted public were not able to acquire them, and there will be criminal liability for offenders. In fact, at the start of the ILS market, the stringent supervision is all right. However, after some time, we should learn from the global experiences and also to avoid comprehensive review on our own development to see if we can relax suitably. But too stringent restriction will put an obstacle on development ILS market, and the IS and make a balance between protecting investors and promoting healthy development. Another goal is to expand the scope of insurance business of captive insurers so that the multinationals can manage their international business. For example, we insure this was the setup to try to take on risk, and also for group holdings, so less than 20% of control interest. The relevant proposal can bring on more captive insurers to Hong Kong, which we should sector will welcome this. Thank you, President.
Mr. Kenneth Leung.
Purposes of this Insurance Amendment Bill 2020 are twofold. One, to provide for a new regulatory regime for the insurance-linked security business, and second, to expand the scope of insurable risks of captive insurers set up in Hong Kong. But I will just concentrate on the first leg of this proposed legislation, the issuance of insurance-linked securities, because I think the second part, the expansion of insurable risks of captive insurers, are rather straightforward, and the changes, I do believe, adhere to the international standard. Now, the insurance-linked securities, in fact, is a kind of derivatives, as I can say, which diversify the risks of insurers and reinsurers. Now, I have read a paper prepared by the Law Society which comments on the bill. Now, under the current legislation, as it is drafted, the issuance of the insurance-linked securities should be approved by the insurance authority. But after studying the paper submitted by Law Society, I'm quite confused, because actually what the so-called insurance-linked securities are, in fact, I think, some sort of derivatives which aims to diversify risks. And it is not really a type of insurance business, because, well, maybe the government would need to do some explanation, because we didn't have a bills committee set up for this bill. And if it is the case that this is a kind of hybrid product, a derivative plus an insurance contract, then the approval process for this product, I think, should be vested with the Securities and Futures Commission and also the Insurance Authority. But however, at the bill as it is drafted, only provides for the security to be approved by the insurance authority. I don't know how much input would the SFC would have on the product. This is my concern because the product itself may not come strictly within the realm of insurance business, although in the bill itself it is said it's a special type of insurance business. So I need a more thorough explanation and justification for the security to be classified as a special purpose business. That is a very important and fundamental question. I would like clarification. And the second main concern about this security is that, of course, the security would only be sold to very sophisticated, investors. And after reading through the draft legislation, and I can find it in Section 129A, it said the authority, meaning the insurance authority, may make rules for special purpose business, which include rules to prohibit sale or the making any offer to sell insurance-related securities to any person other than investors falling within a type. And I've been given assurance that these targeted offerees of these products would be institutional investors. But I haven't read the rules. Of course, the rules will be drafted and promulgated only after this bill has been passed, will be passed. And I also heard from the Honorable Chen Kin-po say, oh, by the way, if the market is familiarized with the product, then in the future, the government should consider selling these products to a wider spectrum of investors. I do want that this is really complicated, insurance product or derivative product, and I would also like the Secretary to make clarification. What has he got in mind in relation to these rules? What are institutional investors? Are they different from the professional investors as defined in the Securities and Futures Ordinance? And are there any plans to expand the sale of these securities papers to the public in the future? Well, these are the biggest queries I have in terms of investor protection. And I do think, of course, I don't know how much economic impact this bill can bring, but what am I saying here is that I am going to support this bill because it is at least, but this would enable Hong Kong to accommodate a more diversified type of investment product. But bearing in mind, I've been repeating this theme for many, many times that the national insurance law also have a very big negative impact on the confidence of investors, especially investors from Europe and North America. And I would urge both the Hong Kong government and also the central government to take more possible, visible, and robust steps to alleviate all these concerns of the Hong Kong people and the international community. Thank you, Mr. Chairman.
胡志偉議員
The purpose of this bill is several-fold. This includes expanding the insurable risks of captive insurance companies established in Hong Kong, and there are also some minor technical requirements. The most important part is that there will be a new regulatory system for the insurance-linked products. Now, the insurance companies can offer insurance-linked products, mainly catastrophe bonds. The government documents tells us that catastrophe bonds may lead to has to do with possible losses when there are major catastrophes. Now, there are different contract arrangements, different trigger points for different catastrophe bonds. And of course, we don't have the opportunity to make detailed inquiry. Now, a Japanese company in 1997 issued catastrophe bonds to diversify the risks from earthquakes, and it regulates and it stipulates that if there is a major catastrophe within the Tokyo area, the investor would lose 70% of the principal. If it occurs in the suburbs, then they would lose 40%. Now, the trigger point incident may affect the interest in some cases, and in other cases, both the interest and principal would be affected. So it depends on the choice of the contract. Now, the government understands the complexity of the catastrophe bonds. Now, some may not understand what I'm saying, but the contract terms and the risks are closely associated, and the contract terms have risk elements that would be reflected in the investment returns. So the higher the risk, the higher the investment returns as determined by the contract terms. So the administration stipulates the rules in connection with 129A, that is, that the IRS can only be sold to institutional investors. Now, if there is no prohibition for sale to retail investors, then the IRS may be repackaged as other financial products to be sold to retail investors or MPF component funds that are sold to the general public. So the government uses this provision to protect the interests of the retail investors. But members have some questions. Now, what are qualified institutional investors? Now, in the document, it says that the government's intention is to limit the targets for sale of ILS. ILS can only be sold to funds that or companies that invest only in ILS or to hedge funds. But that's not clearly stated in 129A. It only employs the concept of qualified investors. Now, under Hong Kong's regulatory structure, qualified investors means those who have assets over $8 million. In that case, the scope of qualified investors may be too wide. Or are there other ways to limit the definition of qualified investors so that people will be more cautious in making investment decisions? Now, this is very complex. The returns are high, the risks are high. They should only be sold to professional institutional investors or those who engage in hedge funds that invest in these products. Now, the SFC's definition for qualified investors, as I said, is ownership of over $8 million of assets. So that's my understanding of the provisions. So I hope that the Secretary responds. Catastrophe bonds, frankly, not many people will understand, even if you offer an explanation, but the risk seems to be higher than many think. So if some qualified investors who are not suitable for this type of investment are attracted, now that's not something you like to see. You should impose restrictions. Now, another more basic issue is that after this bill is passed, what effect there would be. Does that mean that many institutional investors would issue catastrophe bonds in Hong Kong? Now, the cost for issuing catastrophe bonds mainly includes setting up special purpose vehicles, and the investment banks would incur certain costs, and there would be another factor is whether there's confidence to complete the transactions. So Hong Kong is able to become a center for catastrophe bonds if those conditions remain unchanged. But in the past few weeks, we have been discussing with the government various tax incentives, and we pointed out to the Secretary that this is a bad time for you. When these legislation were conceived, Hong Kong hasn't experienced these major changes that we are experiencing now. Will the investors still have confidence to start this type of initiative in Hong Kong? Now, the Secretary says that there has been no change. We can have confidence in Hong Kong. We have a deep-rooted legal system by the common law. But you are facing international sanctions in respect of the national security law. So different companies have different views. So you may not be able to attract investors to come to Hong Kong to seek capital or to issue bonds. They may lack the confidence, and they may do it in other places. As in catastrophe bonds, when the triggers are activated. Now, when it happens or something happens in the mainland, do the investors have faith in education in Hong Kong? And will the rulings be enforced? People may not have confidence. So under Mrs. Carrie Lam and the Central People's Government, would Hong Kong still be a desirable place for investment? Now, half the Hong Kong people don't have confidence in Carrie Lam. They give her 0 mark. And then we have the national security law. The SAR government cannot win the public's confidence. The investors will think twice before they choose Hong Kong as a center for their funding requirements. Now, it's common commercial behavior that confidence would be affected. Now, this is the last council meeting. I'd like to say to Carrie Lam, now I saw her on TV. She was accompanied by a lot of security staff. I don't know whether she goes onto the streets. Now, many people would shout at her, and they would say, "Hey, you're coming out onto the streets. Many people are looking forward to your downfall, your death." So the Central People's Government and Carrie Lam introduced national security law. It signifies the death of one country, two systems. but we believe seeking universal values, seeking freedom, seeking safeguard by the law is the faith or belief of Hong Kong people. Please come back to the bill. I've only one more sentence. So I'd like to say, whoever is elected in September, the members will make use of our powers under the basic law. We will vote down the budget. Hong Kong people should help themselves. Ho Tun Chow.
Madam Deputy, I'll be brief, but I feel obligated to say something about this bill that is worth of note. The purpose of the bill is to develop the insurance-linked securities. One of them is the catastrophe bonds. In accordance with the government's brief, the issuance can be as much as $10 billion US. I'm sure that this will bring about business for the insurance sector, but I think I have to point out that these catastrophe bonds carry exceedingly high risks and they cannot be sold to the retail investors. Madam Deputy, because of the pro-destruction members who paralyzed the council and couldn't set up the Bills Committee, and I became aware of the catastrophe bonds being involved, so I pay particular attention to the risks. And I think we ought to have a listen to the explanation from the administration. I'd like to highlight at this point, in this bill, we like the administration to tell us categorically that catastrophe bonds cannot be sold to the retail investors because of the high risk. And Clause 129A provides that the insurance authority will lay down guidelines that these high-risk products will not be sold to the retail investors. Now, if there is a breach, there will be criminal sanction with 6 months a custodial sentence. I like to say that in the principal ordinance, there are requirements that will be laid down, but we haven't seen the requirements there. Now, we haven't seen the rules and regulation there. I hope that when you formulate the subsidiary legislation, you have to spell out in no uncertain terms that catastrophe bonds cannot be sold to the retail investors. They can only be sold to the institutional investors. If you allow the retail investors to be involved, the risks will be exceedingly high. When you lay down the rules and regulations, the product cannot be refashioned and sold to the retail investors. So in the subsidiary legislation, this is something that has to be spelled out. The retail investors will not be allowed anywhere near the catastrophe bonds. Madam Deputy, I heard members talk about the national security law and how these will be detrimental to Hong Kong. I like to say that the NSL is to protect Hong Kong, to ensure safety and security in Hong Kong. I don't think anybody would like to see the thuggish behaviors that will be taking place in Hong Kong. I'd like to go on record to say this. Thank you.
如果冇其他議員發言，
If there are no other members who wish to speak, I now call upon the Secretary for Financial Services and the Treasury to reply. Then the debate will come to a close. Thank you, President. I would like to respond to the Secretary in 3 aspects. First, I would like to explain what the risk of the product is. What this has to do with the catastrophe and the natural disasters, which is different from the financial products which have the typical risk of the economic cycles, and also that they may have a motive to purchase this kind of security.
呢個產品咧係2018年。
Now, in 2018, this product was announced in the policy address, so we're following up now. Now, on the regulation of this product in connection with the SFC, now, concerning the structure and nature of the IOS, now, if it falls under the definition of securities under SFC, then it's under the FSC. But the insurance authority will have to do with the sale of the ILS. This is the international practice. And now, who will buy the ILS? Yes, we are concerned that this product cannot be sold to the public. It cannot be repackaged to funds that sell to the general public. So this will be realized in the subsidiary legislation. And now for individuals who own assets over $800 million, now these are not institutions, so they cannot buy these products. And in the forthcoming subsidiary legislation, we also stipulate the minimum amount. Thirdly, what is our next step? Now, this is an enabler. Now, what is our next step to improve our insurance market? There will be subsidiary legislation latest by early next year, and we will promote market engagement and looking at the features of international market. That means we will broaden to the international market. Thank you. I now put the question to you that the Insurance Amendment Bill 2020 be read the second time. Those in favor, please raise their hands. Those in against, please raise their hands. I think the question is agreed by a majority of the members present. I declare the motion passed. Insurance Amendment Bill 2020. This council now becomes a committee of the